Hello and welcome to another year and another Freetrade portfolio. So this year has been the start of another unknown year in the stock market. And to begin things off, the stock market is very uncertain about if it should go down or up. Now in this video, I'm going to show you my general investment account and also my ISA for Freetrade. And Freetrade is my main investment portfolio. So this means just like any other investor, I'm trying to get the most out of my money. So without further ado, let's get straight into it. So for the first time, my combined Freetrade portfolio is over £70,000. And that marks the end of me depositing a lot per month into my Freetrade account. I'm going to probably start filling up my Trading 212 account, and this is because it's getting a bit too close to comfort with the FSCS limit of £85,000 being protected on your cash and your assets, and Freetrade benefits from being part of that. So I do expect this portfolio in total to go well over £85,000, and so I no longer will be depositing a lot of money into it. So to begin with, this is my general investment account, and as you can see, the value is £25,524. It will go up and down because the market is still open, but as you can see, today it's up by £43, which is actually really good because throughout most of the day it was actually quite down. So in the past 7 days I am up by £106-ish, and you can see from this point here, which was literally yesterday, the stock market was doing really well and I had a value of 25,809. But so is the life of investing, especially in such a bear market right now. The value of your portfolio is going to go down. So over the past month, still a £404 increase. Past 3 months is actually up by £1,000, and similar for the past 6 months. The past year is actually down by 692, and maximum you can see that my portfolio is down by 3,865. At the peak, my portfolio was worth around £36,000. This has decreased sharply here because I've taken out and put into my ISA into different times of the year. So I'm going to go through all my holdings and talk through my strategy in trying to get the most out of the stock market this year and for the foreseeable future. So Intel, I hold only 0.1 shares, and that's down by 47%. CSN is down by a big 23%, but again, that's not a lot of money to be losing. I have only one share in the iShares World Dividend, and that is up by 5%. Gap, I have 1.3 shares, and that's down by 8%. Xinhuan Real Estate, I have 4.2 shares, and that's down by a massive 86%. Avaya Holdings, the biggest loser yet, that is down by minus 98.39% in pounds and minus 98.5% in dollars. So I've just about lost everything in that. As you can see, recently I have bought 25 shares in this company for only £4, which is stupidly crazy. On top of that, I did actually buy 13 shares of it. So for about £6 worth, I got the amount that I had bought for £900, which is stupidly crazy. And another reason why to never invest in individual stocks. That being said, Avaya Holdings might be actually a good place to put your money. Maybe they are talking about bankruptcy, so I would err on the side of caution. And as you can see, over the past 7 days, even the past 1 month, it has been very, very volatile. So maybe there is some money to be made, but also potentially a lot of money to be lost too. Kyndryl, I have 1.7 shares, and that was a free share, so the value will never change on that. Rolls-Royce was doing really well until about today, but the company is up around 50% since I bought it. So if I had put more money in there, maybe I would have made more money. But of course, putting all your eggs into one basket is a surefire way to lose a lot of money. But Rolls-Royce is doing really well with a plus 49% yield. Satona Al-Katwa Global, actually it's Satona Al-Kauta. I always get that wrong, but that's down by 13%. Aston Martin had bought 41 shares ages ago, and that is down by a minus 92%. So that's a £773 loss. They did give a dividend in October of £46, but still that loss is actually really high. I have 19 shares in the ESG Global, and that is down by 7%. CrowdStrike is actually down by 51%, which is a huge amount. Even though this was a free share, the value is down by £82 worth. Clover Health, another massive loser, 85 shares, down by 91%, and that's a loss of £815. In terms of dollars, that's a 92% loss, $1,148. Comment down below what you would do with an extra £1,000 that I seem to have lost in almost every company that I trade in individually. Cognite Software, again, minus 86%, and that's down by £771. AGM Holdings down by 84%, that's £750. Fastly down by 83%, and that's a loss of £750-ish. I have 11 shares in the FTSE 250, and that is up by almost 10%, which is really good. Alba Mineral, I have 345,823 shares, and that is down by a massive 63%. Corsair is down by a massive 49%, and I have 41 shares in that. I really thought this company would be good, but it turns out that it was grossly overvalued during the pandemic times at a share value of around 50 plus. So yeah, I think that probably was what was happening. One Life is down by 43%. So the value lost is £390 there. Alibaba is down by 42% and I have 6 shares in that, so Alibaba is not doing too good. Shoals is down by 29%, so that is a loss of £260. Metro Bank is down by only 10%, so in the past 3 months it's actually been doing incredibly well with an increase of 65%. So if you had invested in Metro in the past 3 months, you're probably very happy to see its share price increase. And I do think there is room for it to increase more, maybe £5. Freetrade, if you're a Plus member, will have one of these analyst things, and as you can see, 29% go favorable, 43% saying unfavorable, and then sometimes they do have price targets. So actually for this stock it's not available. So Baidu is down by 18% and I have 6.6 shares in that, so that is a loss of £161, which sounds like a lot, but in relative terms of my portfolio, that's absolutely nothing. Okay, and I have 355 shares of the FTSE Japan, which I bought for around £9,000, and that says it's down by £138, but it's actually down by another 500 on top of that, so around £630. This does represent a really big holding. £9,000 is quite a lot. If we go into insights, we can check my portfolio performance against the world performance, and as you can see, against the FTSE All World ETF, I have been doing slightly better in the past month. If we change that to 3 months, I have been doing significantly better, and if we change that to 1 year, I've been doing worse. But realistically, if we change that to maximum, I've been doing a whole lot worse than the actual overall stock market. And that is because when I started investing, I invested in all those stupid companies that I still have hold of because I had no idea how to invest. But as you can see, going back just 3 months, I completely changed my strategy, and I have been temporarily anyway leveling or beating the stock market. And that's not because I'm an expert stock picker or anything like that. I'm actually going to show you my strategy now. So if you've watched my latest video, you would have known that I spent over £50,000 on a single stock. I just spent over £50,000 on one stock. And in my general investment account, I can show you some of this. So in my general investment account, I have in total 1,783 shares in the iShares S&P 500, ticker symbol GSPX. This is the hedged version of the S&P 500, which kind of basically exactly mirrors the S&P 500 that they have in the US. So I bought most of this at a price of £6.54, and I had a huge feeling, a gut feeling, that £6.54 at that time was going to be pretty much the best we see this year. I do feel like, I have no proof for this, but I do feel like the stock market is going to rally towards the middle or end of the year, and I feel like buying now is a better way of securing my ticket to good returns. That being said, if the price does go below, which it is very likely to do so again, I will be buying some more in my general investment account, and come April I will be selling that and transferring it into my ISA. And my ISA for the next year will not be in Freetrade because I already have 2 years in Freetrade and I'm coming close to that £85,000 limit. So in fact, since I have bought this many shares in the S&P 500, it has actually jumped. Taking into consideration I already own some shares, I had around £1,000 of GSPX in my general investment account. That was kind of at a loss, so already the price has gone up by 1.2%, which is a £144 gain. And if I had invested yesterday, the value of my total portfolio would have been in excess of £71,000. If I recorded in this morning, it would have been less than £70,000. It would have been £69,000, and I could have made a video saying nice. But anyway, the share price is £6.69, so that kind of counts, doesn't it? So anyway, in total, I have 1,783 shares of the GSPX in my general investment account. Now let's go and see what's happening in the ISA. So as you can see, just before filming, I did have this quite a nice jump. However, in the past 7 days, you can see the total value of my ISA at one point was £45,350, which looked really, really nice actually. So in maximum, the value of my ISA right now is £44,779, which is a gain of exactly £4,779. Well, it just changed, £4,778. And this is because of the ISA limit. You can only deposit £20,000 a year. So every gain I do get is a pure profit. So if we go into insights, there is no surprise that my ISA is actually doing pretty well, and I do want to explain why. So as you can see, over the past month, it has gone up in the same way as the total stock market has gone up. However, there are 2 periods of very steadiness, and this is where I kept my cash, I kept my cool, I kept everything in cash, waiting to pounce on an opportunity to buy into the S&P 500, to which I am quite happy that I did buy it. However, obviously I could have timed it better, but the risk in timing is just so bad. When the stock market does rally, it seems to rally maybe 10-20% in a few days or weeks. So missing out even on a few days of not being in the market, you can lose up to 30% of your gains traditionally. So that's something that I didn't want to risk. I might have made maybe £2,000-3,000 more, but really, is it worth it to give up £10,000 to do that? I don't think so. So over the past 3 months, I've beaten the world ETF by around 7%. If we go into maximum, again, we can see that I have beaten the all world ETF by around 22%, and this is mostly in part by trying to time the market, which I am no longer going to do. And let's go into my portfolio to show you what I've been doing. So I have 2,400 shares in Alba Mineral, that's down by 57%, so not a lot put in the first place. Master Energy is down by a massive 81%. Amazon, for some reason, I bought 0.2 shares. I do think Amazon is actually a pretty good buy right now. If you look at their financials, they're a really good company, but they're gone through a massive fall. So maybe it is a great time to buy Amazon. As always, I will never tell you what to buy and not to buy because I am not a financial advisor. Rolls-Royce, 21 shares, and it's up by 41%. So just for fun, I bought more Avaya holdings in my ISA, and the reason is if it does shoot up for some reason, it's going to be a huge capital gain, maybe in the thousands, and I don't really want to have that in my GIA because I'm going to have to pay capital gains tax. I've only spent £22 and I've got 135 shares, which is more than double what I paid £900 for when I started investing. So it is fun to kind of buy into these penny stocks. You never know if they're going to explode back again, and of course the gains can be huge and the losses are very low at this point. But that being said, most of these penny stocks are looking at bankruptcy straight into the eye, and there's no guarantee of anything if you buy a company like this. FTSE All World High Dividend Yield is up by 2%, and I only bought 1 share of that. Aston Martin, 49 shares. I have this thing, like I said, with Avaya Holdings. I've literally bought more shares in Aston Martin for only £77. Okay, that's quite a bit more expensive, but I do think Aston Martin's a great company, and I wanted to buy it again at a cheaper price. I don't think it's going to explode. Let's see what the analysts are saying. So they have a price target of around £8.53 at the highest, which is a 400% increase, which is really good if you put a lot of money in it. Obviously, if you put something like £70 in it, even a 4 times increase is not going to yield you life-changing returns. I have 2 shares in the VUSA, which is probably the most popular option in investing into the S&P 500. My reasoning for not going for VUSA is as simple as the fact that at its peak it was around 67.96, right now it's 60.67, so that is a difference of only 12%, whereas my favorite GSPX has a year to date, or from last year to this year, it has a decrease of around 21%, meaning that if it does go back to level, which is probably very likely to happen, I will be gaining a lot more, and this is mostly due to the currency changes between the dollar and the pound. Disney, I have 3 shares and that's down by 25%. Meta, I also have 3 shares and that's down by 38%. And last but definitely not least, and a big old holding here, £43,896, so that's 6,565 shares into the GSPX at an average buy-in of £6.54, and already that is up by 2.25%. That's £963 increase. Yesterday this was a £1,500 increase. Very quick gain, and also why you should always stay invested. Like, look at this, I bought here, within 2 days it went up here. That is thousands of pounds to be made. If you stay out of the market, you're not going to get these gains. You're going to end up buying higher and of course not making as much money as you wanted. The age-old saying, buy low, sell high, is how to make money, but most people will never ever be able to do that. Hope you guys had a very amazing start to the year. Make sure to check out some of my videos, and I will see you in the next video.